There's so much that I want to get into and a bunch of rabbit holes around the exponential age and your thesis there and Web3, some of the cool, new business stuff you're building there. But can we start with just like your path? Because you have a really interesting story, coming from not dissimilar to me, like a traditional finance background. You were at Goldman Sachs, which is like as traditional as traditional finance comes. What led you to deciding to leave and sort of going down this path as an entrepreneur? At the time that you did.
So my first step of leaving Goldman was realizing I didn't want to be at Goldman. Is that it's not me. I loved Goldman Sachs for many things. Probably the world's greatest network, to be truthful. And you're around some of the smartest people in the world, but you're confined. You're confined in how you are, what you do, in a way that I just knew that wasn't me. I've always been quite individual. I like to do things differently. And so I saw the recession coming in 2000 and I wanted to trade it. I've been lucky. It's been like being taught acting by Robert De Niro and Al Pacino and whatever, because I got to speak to the world's most famous hedge fund managers all day. Paul Tudor Jones and Lewis Bacon and Stan Druckenmiller and you name it. So I thought, I want to give this a go. And so I went to, luckily, one of my biggest client, in fact, hired me, which was GLG Partners, which was a giant hedge fund firm in London at the time that ended up turning into Man Group. Did a macro book there, and after about 3 months of doing well, 6 months doing well, they said, well, listen, why don't we start a macro fund? So I co-ran it with another guy called Ben Gill, and we started that fund and built that one up. But over that period of time, it was much more entrepreneurial. GLG was a great place. I was losing my mojo with macro. I didn't have a great year in my last year there. It wasn't a disaster, but it wasn't great. But it's how the industry had changed. It had gone from being this gunslinger's high volatility, long-term conviction world to asset gathering, low volatility, lower returns. And that was the rise of the pension funds and the insurance companies piling huge amounts of money in the space. And they said, we don't want 15%, 20% volatility. And we're prepared to not have 30% plus returns in great years or more. What we actually want is to look more like a bond plus. We want 6% volatility and we want 8% returns. And I'm like, it's not my game. It's just, I don't enjoy that. And I could see that was the death of the industry because it was forcing people to be shorter term in their time horizons. So macro, Paul Tudor Jones told me a great thing was what makes a great investor in his mind is somebody whose idea horizon matches his trade time horizon. Right? A lot of people think, oh, the dollar's going up over the next 6 months or 2 years and trade in and out of it. Or the opposite is true, is they're short-term traders by nature because they have to be. You have this monthly P&L and every position basically gets reset every month because your investors go, well, why did you screw up last month? They don't look at where you bought something and where you sold it in the industry. Unlike VC, in the hedge fund industry, it's where you were marked last month.
Yeah, it's mark to market.
So it's crazy. So what it means that everybody's time horizon is this 2 week to 2 month time horizon, yet your idea horizon, because it's macro, is in economic terms, which is 18 months or so. To go from peak economic cycle to trough recession, that's a 2.5 year thing. And it gets interesting to trading from macro for about an 18-month period, but you can't do it. So I'm like, this is useless. So I kind of defiantly left and decided to opt out of the rat race and move to Spain because quality of life was something that always mattered to me a lot. Because
You were in London? You were in London before? Okay.
Yeah. And I thought, what's the whole game for if it's not for quality of life? I mean, money's just an output, but the real thing that you're actually working your balls off for is quality of life. So I moved to Spain and I realized that I'd had a lot of experience in macro versus most. And I had also learned how to write. I was writing at Goldman. We had this group chat. It's like an AOL group chat thing that I used to run for the whole firm and became very well known for it. So from the chairman down, everybody read my stuff. And then I wrote an article after a business trip to China when I was at the hedge fund called There's Something Wrong in Paradise, when I turned up to China to expect to see all this, all the amazing stories I was reading and getting from analysts, and turned up and there was just empty buildings after empty buildings. And I'm like,
you and Carson Block.
oh my God, this is a disaster. So I wrote it all up, and I think Stan Druckenmiller got 7 copies. And so I realized that if something like that could go viral, and I knew how these guys spoke, and I knew how they thought, I should write research so I can stay in the markets myself and invest, but also have my hand. And so just by word of mouth, Global Macro Investor grew from Goldman Sachs and GLG backing me, saying, yeah, we'll definitely sign up, to the world's most famous hedge fund managers, family offices, sovereign wealth funds, and everybody else. So that was the first stab at being entrepreneurial. And
do you think, just to pause you there for a second, I mean, do you think that insight that you had a unique ability to sort of abstract all of the complexity around these things that were happening, was that sort of practice? Like, was that, Bruce Lee, 10,000 practice kicks on a single kick, or was it something you just had, you feel like, innately?
So, which is why macro so appealed to me, because macro is this massive 3D, always changing map of the world, of all the asset classes, how they're interrelated, the economies and the news flow. And I found I can hold it in my head. And I can kind of spin it around and look at it and take different component parts aside. And therefore, you can simplify it if you can make a picture of it. And so I just create that mental picture for others. Because most others struggle to see the connections, to see how this could be. People can think one step ahead, but people don't think 2 and 3. And 2 and 3 is where I'm pretty good at, which is longer term, knock-on effects, how this is going to play out. That doesn't mean I get all of them right, but I've been consistently pretty good at that over time. And I can explain it to people in a way that they understand it and can grasp it, whether they disagree or agree. I mean, again, that's the beautiful thing about Global Macro Investor. I've had people who barely ever agree with me, and they've been subscribers for 18 years.
Like, what your observations have been from a career in this of investor psychology, where people screw up, avoiding FOMO, how you've been handling the recent, volatility in markets, etc.
Well, I wrote a whole piece on this. This is the best instruction I can give. Firstly, I advise everybody, if you're trying to trade longer term, which is where I think the alpha is, the real outperformance is because everybody's time horizon is short, yours should be long. And I set up GMI to prove that, and I've proven it over 17 and a half years. I've got a registered, public track record for GMI members over 17 years that's basically proven that exact point. So here's my example. Oh yeah, so write it down. And every time you go and try and sell something or change your position, ask yourself, has something changed versus your thesis? So a lot of people change, but they hold on to the position because they're emotionally attached. We've all done that. Or the other one is you get spooked out of something and you forget your thesis in the first place. And then you're like, then it goes back and you're like, shit, I've missed it.
What advice do you have for staying sober, basically? And what I mean by sober is,
because I don't say sober a lot, but sober.
You know what I mean? Not like getting, doing substances, but, for example, when everything starts, when there's a drawdown, there's a massive drawdown, even if I have this thesis that, let's just say, a very strong thesis, it feels like, it's a sunny day and it's starting to get rainy. And then if you think about it too much, I find it's easy to have narratives in your head, which is, this, OpenSea volume is down. Maybe, Ethereum isn't the play. Maybe I should move it to here. Like, how do you maintain your
because I've got a big picture framework that is robust and tested, and is deep. I've done a lot of work on it. So I feel comfortable with the probabilities. Now, I love markets like anybody else. So I've got on my screen the real-time chart of ETH daily, weekly, monthly, and hourly. I don't even trade ETH. I just buy it. But I like the market and I look at the price action. And what I did the whole period was just didn't look at my P&L. So I have learned, this is a new thing for me, how to disassociate myself with my P&L. Because if not, you're always thinking peak to drawdown. or look how much it's worth now, as opposed to how far are we along in my thesis? Let the numbers take care of themselves over time. I'm learning that. This is a hard one to learn on because the volatility is so high. But I've done it similarly. I mean, I had a very strong view in 2012 about the US dollar and the euro. I was living in euros, billing in euros. GMI was based in euros. I was living in Spain, and I thought, based on a bunch of work that I'd done, that the euro was going to fall over a long period of time, and it was going to fall to 85 cents. 82 cents was my target and has been my target since then. So I took all of my savings, which was a reasonable amount at the time, and stuck it all into dollars. Then, to force myself not to trade it, I bought a couple of properties, one in Cayman and a small place in Miami, in dollars. The only opinion you need to listen to is you hear other people's opinions, you test your thesis, but so many people just flip-flop around because somebody who sounds smart came with a opposing thesis and it scares them or makes them bullish.
Sort of insight that was going to make it, beat the market, have underperformed the dumb dollar cost averaging I did into the S&P 500, Bitcoin, and ETH.
Yeah. All you need, there's a hack to all of this, is all you need is a secular trend. Try not to be the smartest person in the room. Try to be dumb. Where is the obvious direction over time? Because the obvious direction over time is where you'll make the most money. You can get smart around the bets there, but the obvious direction of the adoption of crypto assets is that it's going higher. Now, that adoption rate slows and speeds up over various periods of time. So you've got a tailwind, which is amazing, right? Why does the S&P 500 outperform value and stock picking? Well, because 86 million millennials are dollar cost averaging into a 401k. So you don't need to be smart. If you look at the global economy, which is the most obvious global economy in the world that you want to be long of for the next 15 years, 20 years, it is without question India. Why? Because they've got 1.3 billion people with an average age of 28. You haven't even hit the demographic sweet spot, which is that 30 to 50 range, right? So all of these things are around everywhere.
Brought up India, I heard recently from Balaji, actually on the Tim Ferriss podcast, that he said that the majority of
the English-speaking internet will be Indian.
Exactly.
That is on my Evernote in front of me because we've just started Real Vision India, and it just struck me as something immensely powerful, based exactly on the same demographic consequence of having 300 million people who are English-speaking of the middle classes in India.
That changes the fabric of the internet fundamentally. And once I haven't been able to sleep since I've heard that, basically, because I was like, this changes everything. I don't think enough people realize it. And
it was the same for me, Greg. It struck me. I mean, as you know, I'm half Indian. I mean, I'm a huge India bull, and I had not got that simple. So this is somebody who's clarified a whole complexity. I could speak for hours about India and what they're doing and everything else. He's distilled it into one point that is so prescient that it kept you up at night.
Say it one more time, just for clarity.
Soon, the majority of the English-speaking internet will be Indian.
Yeah.